Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be looking at the rounding bottom chart formation. This is a long-term reversal formation, basically turning a downtrend into an uptrend. In order to do that, you must first have a downtrend. And once you have the downtrend, you can see these develop. They are long-term. That basically means that it takes several months for them to form. So most analysts use a weekly candlesticks to find these as opposed to daily candlesticks. Whenever you're looking at these particular patterns, I'm showing you a perfect example, and then I'm going to give you some variations you might see. The perfect example is you're going to have a sell-off that's very basically rounded or saucer shaped. Like a cup. You basically have the sell-off that forms here, and it takes a period of time. Like I said, it's a long-term trend signal here. And the thing that you need to note about the low point, though in this particular case it forms at the center of the cup, it's not actually required. You could have the lowest point form earlier on during the panic selling. For example, your lowest point could happen here, and then you see a jump back up, and then it goes back into forming this formation right here. Okay, so just because the low point is at the center here doesn't necessarily mean it has to be, and actually in more cases than not you'll see it this way. The secondary thing you need to note about this particular pattern is that if you draw a line through the center of it, the amount of time it takes to form this half is roughly the amount of time it'll take to form this half. It doesn't have to be, but in most cases it will be. If it goes too fast, if it advances too quickly right here, then it's probably not a rounding bottom. But that's just something you should note also. The resistance line that you're going to have to draw out, because it's not going to be actually completed or formed until you break out of that resistance point, starts from the initial formation of the pattern. With the high point, you draw a trend line across that, and this is going to be your resistance line. Once you break out of that where price closes above that, like you did right there, when you close above that, then the formation is actually complete, and you can say you have a rounding bottom. Sometimes you will get a secondary test of that resistance, like price activity will move up and then pull back down and test it and see if you have support. That can be a secondary entry opportunity for you, but it doesn't always have to happen. Okay. You can also consider the rounding bottom kind of like an inverse head and shoulders pattern, just without these shoulders. Volume is nice to have. It doesn't have to be there in the early phase, the first start of the sell-off here. You don't have to have substantial volume, but I like to see volume track the move and confirm what is going on, the price activity chart there. On the breakout, you would again want to see volume. That's more important on the breakout. That's going to confirm and give validity to that breakout. Without that, the breakout would be in question. It should also be noted that because of the depth of the saucer or cup formation that you have here, whenever you see the sell-off, let me draw this out again. When you see this sell-off and you move back up here, because of how deep it was, when it does come up here and break out a resistance, sometimes instead of finding immediate support upon it, it'll actually trap down below it again, and then it's kind of bounce around and then make a secondary move higher again. That would be forming more of a cup with handle formation, but that can also happen. So keep an eye out for that. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.